Welcome to the Nichols Tax Update Podcast for the week ended July 23rd, 2021. Here is our standard disclaimer. I won't read that, but I do want to remind everyone that I acknowledge the value when I prepare this program of my subscription to Tax Notes Today, published by tax analysts, in my opinion, the preeminent source of information for tax professionals. Let's see what we have last week. Only 4 items, but they're interesting. At least I thought so. There's a new Tax Pro account feature that will allow practitioners like you and me to record Forms 2848, powers of attorney, and Forms 8821, the right to look at our client's information in real time. So that authorization goes into the central authorization file. We'll talk about that in a minute. Then a couple has a really misplaced faith in the Cohen Rule. It still requires some factual basis for an estimate. Our third item this week is an S corporation shareholder who's going to be required to submit basis information on the new Form 7203, and that's all S corporation shareholders. And any year where they claim it, where they have a distribution or they claim a loss. Then the IRS makes both procedural and substantive arguments disallowing a deduction for conservation easement. We've been tracking this for several weeks, in fact for several months. The IRS is notching victory after victory in these syndicated conservation easement deals where the value of the property has been inflated, the deduction available to limited partners who sign up and who make a capital contribution has been inflated, and there's great grief and sorrow among the so-called tax planners and those who would have inappropriately reduced their tax liability. So let's talk about these things. First of all, this new Tax Pro account. You go to irs.gov, you find a tool that will allow individual taxpayers to authorize their tax practitioner to do 2 things, or one of 2 things, or maybe both, to represent them before the IRS with a power of attorney, Form 2848, and by the way, make sure you use the current form. No, don't pull one out of the file. Download the form so you make sure you have the current form, and to view their tax account, or just to view the account, not to represent them, just to see their information, and that's an authorization Form 8821. The system uses digital authorization and account recognition to post information directly into the central authorization file system, thereby eliminating any delays. No more 24-hour wait, no more we lost the paperwork, we can't find it. It's instant. It shows up right away in real time. Now the Cohen Rule. Sam Feigenbaum and his wife are in the tax court. We got a summary opinion. The great showman George M. Cohen. This was the closest image I could get out of clip art. This is a song and dance critter over here. But George Cohen litigated and left a legacy of success against the IRS on the subject of travel and entertainment that the courts have followed for over 90 years to allow estimates of deductible expenses in some cases. The Cohen Rule is one of the 10 most often cited court cases, one of the 10 most cited authorities in all of tax litigation. In every case, however, where it's been successful, the judges have insisted that there be some factual basis from which an estimate could reasonably be inferred. If you don't have a single transaction from which to make an estimate for 10 or 20 or 100, how do we come up with an estimate out of thin air? Well, Sam wasn't exactly thin air. He had worksheets, he had calculations, he referred to industry average amounts, but he provided no evidence of an actual transaction. No copy of a credit card, no canceled check, no account that showed Sam incurring some expense, no paperwork of any kind. So the judge said, I can't just create a deduction for you based on your estimate out of thin air. The Cohen Rule requires some factual basis for estimate. Let's remember that. And any time we think that we might be able to rely on the Cohen Rule, especially where we're trying to estimate a client's travel and entertainment, because that was the subject of the Cohen decision. Now there's new form. There's new form 7203. It's going to track shareholder basis. You want a copy, contact John Callahan at the IRS. I found John to be very responsive. I called about 10 o'clock in the morning. I had an email with copies of these forms by 2 o'clock in the afternoon. The shareholders are going to use Form 7203 to calculate their stock and debt basis, ensuring that any losses and deductions they claim are accurate. The form and instructions have not been made available to download at this time. John can, but you can't. Rather, interested parties are directed to request the form and instructions directly from an IRS contact who's listed over here on the right-hand side of this slide. What does the form look like? What did I get? Take a look at the form on the next slide. This is the form. That's all of it I could get on the slide. That's part 1. I assure you, parts 2 and part 3 are equally daunting. Obviously, the IRS wants the details of how we are coming up with our S corporation shareholder stock basis. Now, I've been in correspondence with a couple of my friends that are much more active with an individual practice today than I am, and they tell me that their tax software is tracking shareholder basis provided they enter the necessary information. So I'm suggesting to everyone who's not been doing this that you reconstruct whatever records you need to reconstruct to determine shareholder basis and follow that basis through. By the way, I have a little, I call it a Nichols knowledge nugget on that very subject. You get a new client, an S corporation shareholder, they have no idea what their basis is, you have no idea, and the former accountant has no idea. How do you reconstruct shareholder basis in a way that the IRS will accept it so that going forward, you don't have to be concerned about deductions being disallowed or distributions being taxable? If you want a copy, let the folks at SCAPA know that you want the Nichols Knowledge Nugget on S corporation shareholder basis reconstruction, and they'll let me know, and then I'll provide a copy. Finally, no conservation easement donation deduction for this LLC or its members. The Hancock County Land Acquisition LLC attempted to allocate to its members a charitable contribution deduction for a conservation easement. This document is an IRS motion for partial summary judgment, which they're likely to get. The document alleges, number 1, that the deed fails to protect the interest of the donee in perpetuity, represented by our farmer over here with a deed and a chicken. Second, the IRS alleges that the appraisal summary, which was submitted with their return, omitted important information that would have alerted the IRS to the likelihood of an inadequate valuation appraisal. The appraisal summary said the property had been acquired by purchase. It wasn't. It was acquired by a contribution of capital from the member who was a promoter. The appraisal went on to say, and went on to make another, not exactly a misrepresentation, but that's a misrepresentation. It wasn't acquired by purchase. And the appraisal had another flaw that made it impossible for the IRS to tell what the likelihood might have been of an inadequate valuation appraisal. And so the IRS seeks at least partial summary judgment in this case. They've been winning these cases left, right, and center. My advice to you, if you have a client that's caught up in one of these, settle with the IRS as soon as you can. There may be a settlement offered to all of the members of a particular LLC. Investigate the facts, the circumstances, and seriously think about taking, if the IRS offers a fair settlement, think about taking it. That's it for this week. Thank you for your attention and your support. It's a relatively short week. Remember to stay safe. We need each other to get through all this.